I might.
Oh, what's that? Yeah, I will share my screen for anybody that can't
Okay.
see a chart.
If you
Okay,
can pull up the daily of SLB.
Yeah, just pull up SLB.
SLB. Got it.
Pull up the
I'm on
daily.
there we go.
And just so you know, we have just activated recording of this session. That's what recording Craig says up at the top there, just under Taco's name.
If you guys click my name, you'll be able to see a button that says live, and you'll be able to click watch stream if you don't have the ability to pull up your own chart.
That's great.
Yep, it's working for me. Thanks.
Okay, so if you pull up the Schlumberger chart, so the first reference point is going to be this basically reversal day that happened on November 14th. And you'll notice that all of the trading has occurred under that since that day. And you got, if you just draw a straight line across from that, okay, this is how I set this trade up. And now you've got, starting in December, a series of higher lows. Does everybody see that?
Yep, pretty clear.
Okay. So now, if you've drawn that straight line off of that November 14th high, you'll notice that we had a 3-day, we came up to that level. We had a 3-day consolidation, which was a gap. There was a gap, and then you had 3 days that gap held. And so one of the rules that I developed over many years is that if a gap holds for 3 days, it's going to hold for a while. So as of yesterday, we had held for 3 days. And not only that, we were basically on the close, we were right at that line, coming off that November 14th high. So that's why I chose basically for an entry, short-term scaling, etc. So it's a combination of intraday trading and getting in a free ride on a long term, because that's a very bullish setup. So basically, and now I will fold into how I look at things short term, because what you want to do, I always say, know your time frame, and knowing your time frame for a trade is super important. And the time frame for scaling, to just basically try to get it down to a free ride, is quite different than how I identify things that I want to get interested in. Because what I want to do is take I want to take a ride which is defined by a short-term move, but it's riding on a long-term move. You want you want to have the power of the bigger trend behind you. Your hit rate will go up tremendously if you do that. I mean, right now, it's kind of just funny that talking about that, because in the last day or two, we've had a really great garbage rally, and yet none of those would meet that criteria. And yeah, you can get some hot short cover rallies, etc. But if you want to do things systematically, be aware of your time frames. Let the larger forces be aligned with you. It's because the thing about shorter time frames, and I'll define a shorter time frame, like say by a 5-minute chart. A shorter time, when you're trading in a shorter time frame, and suddenly the longer time frame takes over, you make a lot of money. So on the Schlumberger trade, and let me just kind of take you through a really easy way to set up short-term trades. I mean, everybody's looking at too many indicators, and so literally for this Schlumberger trade, I'm just running. I've got the setup on the daily. I've got it. I've got it right on that high. I've got a 3-day gap, which I know is very, very likely to hold. So now I'm very interested in this trade, and I what I want to do is find a place to enter it, scale it, and then keep a runner. And the perspective of time on a runner is very important, because I've literally had runners that lasted for years and paid me tremendously with no risk. And that's ultimately, how we do it. It's not by just darting in, darting out, darting in, darting out. It's getting on something that's happening that's much bigger than any of us are. So on the Schlumberger, if you look at basically the open today, well, even go back to the last 5-minute bar yesterday. And I did, by the way, I did not take this until today. But the last bar yesterday closed above the 10-day moving average. This is, or not the 10-day, the 10 moving average on a 5-minute chart, 10-period moving average. And again, I keep it simple. This is there are no tricks that I'm not disclosing. So the market opens, has a kind of a spiky, and I trade bars, but I know a lot of you guys like candles. It's pretty much the same. There's that opening candle, and the high today, and that first 5 minutes at 9:30 Eastern was 56.88. So literally at 56.89, I got long. Literally, it's that simple. And you'll note that it just, it just kept running. And my initial stop wasn't based on the daily chart; it was on a 5-minute chart. And there's a low of 56.08 from literally it was the low before the breakout on the 5-minute chart from 3:40 Eastern time the day before. So that was my initial stop, and you can see the thing just started moonshining out of there. And so I'm starting to scale. And the scaling thing, you could make it systematic. And I'll say this, and I'll be a cocky asshole. I think I'm better than a computer. And so I follow the price action, and right at if you run an MACD under it on the 5-minute chart, you'll see that the MACD rolled over negative at let's see, that is
11:30.
11:35. So that's that's where I start scaling. I scaled a quarter out there, and then it reloads and goes up. Now here's something that I will look at again, I just don't believe in many moving parts.
You started to scale out or scale in? I'm sorry. I'm trying to just map everything
no.
out for the people.
Great. Oh, excellent. No, so I took a whole position, literally, when it went above the high of that opening candle today.
Yep, I got that marked. And then
so
you
I've
said
got-
you started scaling, but at when MACD started going negative, but was that scaling in or scaling out?
No, that's scaling out.
Perfect. That's what I have. That's what I thought. Just making sure.
Oh, again,
Carry on.
Be clear. Absolutely. So now you notice that on a 5-minute chart that SLB just continues to go up, but MACD isn't crossing over. And in fact, you have a higher high that's not confirmed by MACD. So as we move into that, I'm scaling more. And now, I posted this in the room, just using floor tricks. And so this is a floor trick. If you have an uptrend and all of a sudden you just have like a rug pull, generally speaking, that's just to scare you out. So, and this is just completely discretionary, but I bought some more on that first rug pull that happened at in the bar that occurred at 1:25 Eastern. If you guys can all see that. So, I added back some of the stuff I'd scaled out. So I'd scaled some on the initial cross. Then as it starts to make new highs and MACD isn't doing shit, I ended up scaling 3/4, and then I put another quarter back on that dip, and it immediately, went back up, and at that point, after it went back up, I scaled out that quarter. Still have the position long term at break even, so I can't lose on this trade. I've now banked money in the trade. If some long term trend now comes out of Schlumberger, which often it does after this setup, I've got a free ride. And so one of the takeaways from this is, we want to get our risk on a trade down to close to zero pretty much as fast as we can. Because then you just don't give a damn. And it's the trades that you don't give a damn, or even, literally, I just, that SLB trade for me, it's in an account now that I don't even look at. I mean, literally out of sight, out of mind. One of the key points to take away is you've got to get to a point where you can be objective about your trades. And, if you're not even looking at a trade, you're pretty objective. Hey, Rich, can you hear me?
Certainly can.
Okay, sorry. I think my cell service or something just cut out here. So, all right. So, going through more questions here. Again, you guys just chime in. I mean, there's no question. The only stupid question is the one you don't ask.
All right, now that you asked, one quick question.
Okay.
You started bringing up MACD, and I had mentioned volume and MACD. Would you happen to have information on that? Because I took some notes on what you just mentioned with the 5-minute, and while I've been using MACD and trading it, it never occurred to me that MACD could be making a downtrend while price is slowly creeping up for a potential rug pull. But would you happen to be able to point me in a direction to kind of like a book or something?
Well, not a book. This is just from an observational momentum basis that I've integrated into my trading over the years. I don't use nor value MACD, as a primary entry or exit, but I do value it for money management, for scaling. It's telling me, in this case where it made a higher high after 1 o'clock, but the MACD on that 5 minute was lower than it was much earlier in the day. That tells me that momentum is waning, and so let them have a few. So the whole signaling thing, whether it's MACD, stochastics, RSI, etc. I've never used them for what the guys who quote unquote invented them or at least applied them to trading, because things like stochastics have been used in statistics for a long time. But I do use them to tell as a momentum indicator when I am in a position. I don't use it to initiate a position.
John, David GovTrade was asking for clarification. Are your scales off of a technical indicator or previous price time volume levels?
Okay, great question. And so it's never a volume area. Now it certainly can be a previous price area that I can see that there's been heavy resistance here before, and you could bet there's going to be a grind before it goes through. Now you keep the runner in case it just is one of these things that just moonshots. But generally speaking, really basic supply demand support resistance, it does really work, and in fact it actually works better now even than it used to, because it's embedded in so many algos. That's the funny thing is that because of all the algorithms that are trading literally all these technical things, the technicals actually work better now. And for a while there was like, well, if everybody knows them, they don't work, and that actually was kind of true. But now that this massive amount of money, the bulk of the money in the market is just running on these computers, take advantage of it, because they're not going to cook up anything better than we already have. And in fact, most of the guys I know that run algorithmic trading as a hedge fund, they're excellent money raisers. They're they're very big on the scene in the summer in the Hamptons, but they're not using anything. There's no secret sauce.
And Byron, Tani wanted to follow up with that. How much do you scale? Is it the same every time, or is it more of a feel depending on the trade? And wondering if that's a hard fixed number for you or something that's variable.
Yeah, right now at this point it's a feel. I mean, certainly you could develop some rules based on percentage of what you had at risk that you're going to take that. But generally speaking, I'm trying to time things such that I'm going to catch a longer time frame that is now expressing itself in a shorter time frame, so that I can scale down to a 1/4 position and then run a stop at break even on the remaining position. So there's no way I can lose.
Right. So once you scale your 3/4 as a number, you then move your stop up from that initial pivot point to your break-even point. So at that point, nothing.
Yeah, whatever my average fill is. That's right. So if I break even on a quarter and I made money on 3 quarters, you know, I'm not unhappy.
Neil, I think you have a question you wanted to ask.
So I mean, one of the what I hope you're getting here is the emphasis on what time frame are you doing what in. So you know, I'm scoping out the trade on a daily chart, sometimes even weekly, but mostly daily. Just the patterns set up tighter that way. And then I'm initially entering and exiting on a much more short-term time frame, and then literally letting the rest ride on the longer time frame again. Does that make sense?
I think that's pretty clear.
Okay. You know, that knowing your time frame for a trade is vital. And I mean, the one thing, and it's not that it's true or not true. It's just not clear in kind of a text environment that we exist in, as the Market Misfits, that of when you're putting on a trade, you know, literally, what time frame are you looking at? It's like, okay, you think this thing's gonna like have a pop and for 5 minutes and that's it? Okay, if that's your trade, then stay in there. You know, where I see problems is, oh, my trade. You know, literally, I thought that this thing was going to pop in the next 3 minutes, and then it does, and you're like, oh, well, let me stay around and see what happens. Well, that's fine for a runner, but it's certainly not fine for your primary position because you're literally trading in that time frame. So you've got to know your time frame. I mean, number one, that's literally when you guys are looking at trades, think about what time frame is this trade happening in, and then trade that time frame. You know, with maybe the exception of a runner, and every once in a while you get one that just goes forever.
John George asked the question in terms of SLB because at this point it's sold off after having made money and it's kind of flat. Would you suggest re-entering? And when would you pull the plug? So I guess what George is asking is, at what point does a trade invalidate?
Okay, well, you know, at the end of the day, Schlumberger still closed very strong. You know, well up in the upper quadrant of its range today. So there's absolutely nothing wrong if you've got a runner in it. And literally that's where you want to be. You know, a profit-taking sell-off at the end of the day, a day or two before a holiday weekend, very typical. But you know, likely Schlumberger pulled off because crude kind of got a little weaker later in the day. You know, it's hard to. I try not to be what I call a wise guy and know the reason why. I just know that it did, and I also know that I didn't care. You know, because you know my stop is still way below where it closed. I mean, I'm like, I don't know, $1.10 or so on my stop scale, starting below where we closed. So I was quite happy.
John, it's Neil.
Hey, Neil.
Hey, how's it going? Thank you so much for answering my questions. Question about algos. I know you have one. When do algos?
Okay, algos. Okay, sorry, Neil. It just got I got a little glitch right when you said that.
Okay. Yeah. So when do they enter a trade? Do they like look at a technical indicator, or do they just get a signal and enter right away? Do you have a sense of when they enter? Because that would be a good time for us to enter a trade if we
Yeah.
knew. We just got to do what the algos do, correct?
I mean, literally, right, Neil. You're spot on. Writing on the backs of algos that's the play now. And so every algo is different, but we can identify certain common elements that are in algos. And there's some algos that are trading very short term. There's some that are trading long term. Probably the bulk of the money is still longer term, simply because when you're you can't move trillions of dollars around intraday, and there are literally trillions of dollars now riding on algos. I mean, I remember when a hedge fund with $1 billion was mind blowing. But that's why if you want to approximate what the absolute mindless algos are doing, I like to set up a chart with a 200-day moving average, a 50-day moving average, and a 10-day moving average. And these guys absolutely use unbelievably basic stuff like the golden cross, the 200, the 50 crosses the 200, the 10 crosses the 50, that kind of thing. And so just knowing, let's just stay on the Schlumberger example. You got the so-called golden cross, which is the 50-day above the 200. And that happened. The last time it happened bullishly was October 24th. And so now you know that they're going to have a bias towards buying this in their time frame. So their time frame, as they're defining it, is in daily. But it opens up your ability to short-term trade that, knowing that you've got that wind behind your back from alongside when you get a shorter-term setup. And to me, that's a great way, especially if you have a smaller capital base in which you need to bank profit and not really hold a bunch overnight. Which in a lot of ways is an entirely different endeavor. But that, you know that there's going to be a bias, even though in this Schlumberger chart, I mean, there's all kinds of chop, but at the end of the day, if you'd been, letting it go down and then it crosses back over the 5-minute 10 moving average. Yeah. In this chart. Since that cross, simply because the longer term algorithms, which are moving the largest amount of money, their bias is still going to be, as long as that exists, to buy the fucking dip.
Wow, that's amazing. Thank you so much, John.
No. Does that make sense? And please ask follow-ups.
John, just to clarify, you said you use the 200-day moving average and you use a 10 SMA, and what else?
Okay, Rich, great. And let's be clear about this. So if you want to just approximate what most long-term algorithms are looking at, it's the 200, the 50, and the 10.
Yeah, and I think that you pretty much default to the SMAs when it comes to your moving averages. You don't really EMAs. Someone
No.
had asked a question about that, and I thought maybe you could offer some clarity. I've actually run some comparisons on charts between SMAs and EMAs, and frankly, at least on the shorter numbers, I have not been able to discern a difference.
No, no, and you really can't. There's not really a difference in any way, especially the shorter term it gets. But the truth is that I there's so many versions of moving averages that are out there now. Just remember, guys, that the simple is better, but also remember, hedge funds are extremely powerful, and they absolutely because they can buy it. They use media, publications, etc., to try to sell you a bunch of bullshit, and they, I mean, literally, EMAs, and any other. God, I mean, I've seen so many. God, if you'd seen some of the emails I've gotten over time of just like, well, there's this EMA that but it's the art of deception, and hedge funds absolutely want to push stuff so that they know retail is going to be active at X point or Y point, so that they can dump some size to them when they want to get out. Yeah, you remember we are not in a market; we are in a war. And I mean, literally, until you get that this is a war, the odds of you succeeding are not good, because literally there are forces that are intentionally aligned against each and every one of us every day. And that's why I pay no attention to news. News is an absolute deception. It's used. I mean, so you think that BlackRock can't get an article placed saying what they want it to say? And I know none of you on this call think that, but it's literally, everything and everybody in this country has been for sale for a long time. So here's one thing I just want to show you guys on the bigger forces. So pull up a chart of KWEB, KWEB. And run a 200-day moving average, a 50-day moving average, and a 10-day moving average. Because this thing pretty much traded to perfection today.
Hold on one second. Let me pull this up for everybody. What did you say? K-Web?
Yeah, KWEB.
And you're on a daily, John?
On a daily, yes, sir.
K-Web on a daily. And put what on there? What moving averages did you want?
Okay, great. 200, 50, and 10.
All right. We got 200 in purple. Make it bigger for everybody. Let me change the color so it looks a little bit better. And we've got the 10 in yellow. And the 50 in, we'll do red. Can everybody see that, I'm assuming? I'll get rid of the
Looks good,
magazine.
Taco. And again, anybody that wants to see it, just hover over Taco's name and click on live stream.
All right. You're good? Everybody can see.
Even the boomers can see it.
Who said that?
Craterhead.
Yeah, Craterhead. Excellent. I love you guys. So if you look at K-Web, now you see that you got what's called the golden cross, which again, it's in all these algos, in which literally the 50 went through the 200 yesterday. You guys see that?
Yep, Taco's highlighting on the screen.
Okay. So now you notice that what they did today, they gapped it down. They took it right down to the 10 SMA and they bought the shit out of it. That's algos in action right there. They ran the stops that people put too tight under 2 days that were inside 3 days ago's bar, or almost approximately inside, certainly inside the last 4 days, and picked off the stops, hit the 10, and then they bought it. So what these algorithms will do is that they absolutely can get information on the size of the stop. So let's say they sell 2 million shares to get it to run the stops down. Then they buy 4 million down there. And now they've added to their longer term position.
Taco, are you able to screenshot that to post it as well, please? Great, thanks. So Sean's asking, John, do the algos bounce off the pivot points, i.e. floor trader pivots?
Well, of course, the floor traders don't exist anymore, but I understand a floor trader pivot. They're algos are. This is another thing that I want to convey to everybody. Algos are not all seeing, nor are they, or are they in any way smarter than you are. This literally is they're literally running technicals. They're running moving averages largely, and then they are also sensing where the little guy is so they can fuck him. I mean, literally, one of the best pieces of advice I ever got when I was a young trader in the pits, there was this guy who literally had come from Saudi Arabia, and he was the son of one of these sheiks, and his name is Yusuf Shami. And he used to say to me, John, listen, the market exists for only one reason: who gets fucked next? And so these algos exist to enforce who gets fucked next. They literally know what the emotional points of traders are, etc. And so this K-Web today is a great example of that. It's like, oh my God, it's failed. Well, no, actually they had a breakout just yesterday, and they're just screwing with you.
Excellent. So we've got a screenshot in the room here for that, John, so that people can look back on that. David asks, can you throw out a few key rules for guys with less than 2 years experience to turn this into a professional career? David's been around this for a shit long time, so he's asking for a friend.
Okay, great question, David. it's not an easy question for me to ask because I was literally just thrown into the fire. I mean, literally, I started off in the Chicago Board of Trade soybean pit, and believe me, for more than a little while until a couple of guys took me under their wing. It was like every day, hey, here's your head, enjoy it. But the thing, like when we started this conversation, it's all about experience and making trades and understanding not only the trade, but understand this is so key of how you react or respond to the pressure, because until you get to the point where you can look at this and let's say I came in today long K-Web, which I did. Now I've got a runner on. I've put that out in the room, but I am down to a 1/4 room. If you were new long in the last day or two, you're like, they open it and just rip it down. You're like, fuck. And they want to get that emotional response out of you. So, more important than any technical work we can do here is we've got to wring all the emotion out of you and get you down to objectivity of okay, I see what they're doing, instead of like, oh, I'm red right now. That's the thing. They know that if you're flashing red, you're down on the day, that they own you emotionally. And this is so much more important. And having met and talked to Rich, I know that Rich, grasps this, that it's so much of this is dependent on you and how you react or respond. And what you want to be is to respond, not react. React is negative. Respond is like, oh, there's an opportunity here. Yeah, these guys are, the way I want every one of you guys to start to think is, oh, they're fucking these guys. Okay, so what? How's this going to play out? How do I make money out of it? Instead of like, oh shit, I'm down, because that's how they take your money. It's no matter what. We can talk all the technicals all day, but it's ultimately comes down to you and your emotional state and how you address markets. Because if you can stay objective and keep a cool head, that's how you win. Think of the movie Trading Places. Dan Aykroyd and Eddie Murphy sit there and just sit there and watch the market. I think what was it? It was moving down, I guess. And then they're just like waiting, looking at each other. And then he goes, "Okay, Lewis, now." And then they started buying, and then of course the news they came out, or whatever that they were looking for came out. So be those guys, be the cool heads going, not yet, not yet, not yet. Okay, now. Because understand, if you come into every day knowing that you're going to be fucked with, and then turn that around on them, now you're starting to win the battle. So, once you won that battle, we can talk about indicators that work or don't work or etc. But until you've done that personal work, it's going to be hard, because these guys absolutely, the market is like the ultimate day-to-day emotional machine. And that's by design, by the way.
John, I think we saw that today when you pointed out in this room and another, when we saw that flush in ES around
Yes.
120, 130 this afternoon, that all they were trying to do really was to fuck as many people as possible, flush them out, and then they were going to let it go back up again.
Well, so one principle that this absolutely, it's one and the same, and that is a swift sell-off in a bull market actually reinforces that it is a bull market, that the move is up, that it actually is it is a stop rate. It's an emotional matter. And generally speaking, if you're going up and now it's going to really start going down, they're not going to show their hand that way. They're going to grind it down. They're going to make you think, oh, this is nice, this is comfortable, I can just buy this nice gentle dip. Whereas, so understand that doing the opposite of what you feel, instead of oh fuck, it's like oh great. That is much more important than anything I can teach in any of you in terms of indicators. I mean, literally, and somebody asked the question, about Ed's trade selection and the things that he did, etc. Early on, he had a system that used moving averages, etc. And that was it. And those were in futures markets, not stock markets. Stocks are a little bit different animal, but still markets are markets. But as time went by, literally, he could just look at a chart with no indicators on it and go, okay, we're going to buy that. We're going to sell that. Literally, you should just be able to look at a chart and know whether you should be long it or short it, without any indicators. And so that's the crazy thing, is that one of the greatest traders of all time used no indicators. He didn't use an MACD. He didn't look at volume. He just looked at price. It's like, oh yeah, okay, beans are about to go up big time. And by the way, as Rich says, it was always catching the fat middle. It was never catching the low, never catching the high.
Yeah, indeed. You've got to be satisfied with knowing that you're never going to catch the low or catch the high. As my dad always says, there's not a bell that rings at the top or the bottom.
And your dad was right. And there's no bells. There are elbows to your head in the pit, but that's a whole different thing.
I wanted to add, John, to your comment about the whole psychology. I watched a great interview, a very brief interview with a football place kicker, and he explained to the interviewer that kicking is 90% mental because of the amount of pressure that's on the kicker.
Right. I mean, you're in the spotlight.
But then he added that the other 10% is mental.
Yeah. It's all mental. I mean, if you have the leg, then it's all mental.
Yeah. So we have another question from Markham. Tyler asks, can you walk through your conversation with DeMark and specifically your 90-second monologue about how you identify a good trader.
Okay, great. So, I've met Tom a few times, and one of those was with Ed, and it's one of those things that you just wish you had a recording device, because he's like, so sometimes a 7's a 7, but then it becomes a 6, or the 6 can become a 8, and he's like, so there's nothing objective here, is there? And to me that says everything. There's a subjectivity that I certainly learned in my career. I mean, I'm 64 years old, and I started in the pit in Chicago when I was 23. So I'm 41 years into this endeavor now. So I've been a trader almost double what I lived not being a trader. And anything that's subjective, and that can change. Oh, that 9 changed to a 6 because it did this, and this. It's you have to ask yourself, is somebody making their money in the market or from the market? And there's a big difference, because the from the market guys are just selling hopium. And look, DeMarc seemed like a perfectly nice guy, probably a good guy to have a couple of beers with. But so I don't want to make it personal, but it's just, again, it's just selling bullshit. I mean, he's selling a product.
Well, there's certainly a lot of those product sellers out there, as we've all come in contact with, and our desperation to become educated traders, seeking information that seems to be so elusive.
Well, it is, and I mean, I know that like kind of the hot guy now is Mancini, but again, and I've since Rich visited me, I've just kind of assiduously read the posting, and he's emailed me, and it's just kind of, again, a thing like, well, with all these zones, you just can't be wrong. And I'm just looking for something, not to shit on that. If you put anything into a context, and let me just back up 1 second here. If you have a context in which you are trading and managing your risk, you'll do fine. But there's no absolutes. There is absolutely no secret formula. No, once you accept that nobody knows shit, you're on your way. All I can ever say is, this looks like. I can't say, oh, well, if it does this, it does that. Fuck. I can't make any money doing that. All I can do is say, this is a reasonable bet. I'm at a roulette table in Vegas, or even better, I'm at a poker table. And I'm like, okay, this is the start of a reasonable hand to throw some money in the pot. Doesn't mean I know what cards are going to be dealt when I throw a few out, but it's a reasonable assumption that, this could be the start of a strong hand, but you never know. And so you have to manage it. I mean, managing yourself and managing the trade. That's why the dartboard thing worked. Because literally we threw darts, and then we put the trade on, and then we actually just managed the trade based on, are we winning or are we losing? And that made money. So that beat basically most methodologies that exist. throwing darts because we managed it.
Right. You had your stop, you kept your losses small, you know, and you let your winners run.
Bingo.
I mean, that's trend trading.
That's it. That's it. And it worked out because a couple of those darts ended up, I mean, probably 10% of those darts ended up on things that ended up trending well that we just let run. And 90% of them probably lost money or just chopped and went sideways.
John, what did you tell me Ed's success rate was when you were trading with him?
So Ed, this thing of like, you see all these guys that are like, I've got a, 80%, 90%. No, I mean, it was well below 50%.
I seem to recall you said it was maybe something as low as in the 30s.
No, it was like in the high 30s. And we made $1 billion doing this. So accuracy is way less important than managing your money and letting your winners run. But in order to do that, you've got to let go of the day to day. Now, we can trade day to day, and there are ways to trade short term, but you have to know you're in that time frame. And the one thing that just continually comes around that I see is that I think it would actually be an incredibly valuable thing for the market misfits if people identify their time frame with their trade.
That's something we'll try to figure out how to do it. On the topic of that risk management, Dan said when it comes to futures and accounting for slippage, his biggest losses when trading futures is not being repeatedly wrong, it's being repeatedly stopped out. What sizes for stop losses are used for day trading, and how do you determine that? And how do you combat the stopping out loss phenomena? I'm sure that most people who trade futures in here also get.
Okay, say that one more time, Rich. I want to really get it here.
So Dan says that his biggest losses in futures isn't that he's wrong, it's that he gets stopped out because of the whipsaw. So what size would stop losses be appropriate for day trading?
Okay, so first of all, it sounds like Dan is putting on pretty tight stops. Is that correct, Dan? Because the tighter the stop, the more often you're going to get stopped out.
Right.
And so, it's what occurs to me right up front is simply that you might want to adjust the time frame because let's say I was trading a 1 minute chart, and that was a pattern, right? Well, that stop's going to be pretty close because those patterns are tight, but the odds on a 1 minute of random noise stopping me out is pretty good. Whereas, if I'm trading on a longer time frame, that becomes less. So it just seems to me, Dan, that it's probably a time frame issue. And I would need to know a little bit more about what your trade setup is. But generally speaking, if you're getting stopped out too much, you're probably trading in too short of a time frame.
I think something else, John, that I might agree with is that if your stops are too tight, then maybe your size is too large. And by reducing your size and increasing your stop, you're effectively expanding your stop area, but maintaining your risk.
Bingo.
Can you guys hear me now?
Yes.
Yep.
So I think the biggest issue I've had is, and I've recently gone to a wider stop. I don't trade especially short time frame. I trade really my go-to is 1 hour or and then I'll sort of narrow it down if I look at a 10-minute, sometimes a 15, depending on sort of how whipsaw the action is. And I trade very basic. I trade support and resistance, right? So usually it's not necessarily, I feel like I can be right enough to, if I had no stop, right, and I had no stop loss, I would probably be right significantly more than I'm wrong, just because I'm very selective and pick my spots.
So
Where
Dan, you're basically getting whipsawed.
Yeah, and what I think is my biggest issue is, I'll do like a 4 or a 5 point stop, and then now actually it's been significantly better going to a 5 point. But I used to be like at a 3 point stop, and I would just get
Dan,
right before.
Is this like an ES?
Yeah, but mostly that's 99.9% of what I'm trading.
Okay, great.
And trying to be sort of looser on a 1 hour time frame can be difficult because obviously you're trading something that's like ES. If it goes against you, you can lose a lot, or if you get some news comes out and you blow those stops, you can lose a lot. So I think the problem, not necessarily, I mean, I have it, but a lot of others have, and the number one comment I get from people is, how do I stop stopping out so much?
Okay, Dan, what I hear is a sizing issue. Size it smaller, expand your stop, so you're taking the same risk. Let yourself seek a little more reward. But to me, that's a sizing issue, because you're trying to get a lot of contracts on in a market that can do what time was this today? You had this at 10:25 my time, that big dip. I guess that was 1:25 Eastern. That big giant, just market's grinding up, and then all of a sudden, so size down, expand your stop some, and I bet your accuracy goes way up, and so does your profitability. I mean, generally speaking, most trading problems are not whether you're buying or selling at the right time, price, or setup. It's sizing. And if you have less size, you can take the same risk and but then now you're taking less risk of getting stopped out.
Excellent, John. Thanks. So we're at 7:30, which is about to close our session, but I've got 2 questions, and John, I'm going to let you choose which one you want to answer.
Okay.
The first one comes from Chris, chapter 3.
No hours, nowhere near that liquor store.
So the first question would be, why are you known as, called, and did you choose to be called Rogue? And the other from Quiet Riot would be, do you think that joining Kramer's Investment Club on CNBC would be worthwhile to expand his experience?
That's a great question. So Rogue literally came from my days in the pit. Probably most of you guys don't know, I started off in the Chicago Board of Trade soybean pit. Then I moved over to the bond pit, and then I moved over to the Chicago Mercantile Exchange and was in the S&P 500 pit. And the name Rogue was given to me in the bond pit because, you know, pit trading is very different than what we're doing as screen traders. And so, you know, I would be taking the market would be going up, and I would take the other side of it. And so you know, hey, you're going rogue. You're not going, you know, all of us are buying. But I actually was using, just like I have been talking about tonight, I was using the pit psychology. There's an old saying, when you're yelling, you should be selling. And so I went off the noise of the pit. Oh my God, what an edge that was. And so the market be going up, up, and up, and oh my God, everybody's just getting happy and screaming and yelling. And that's when all of a sudden it's like, sell, 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 sell. So, and vice versa when everybody was short. You know, I always listened for the noise when the crescendo got to just an unsustainable level. Because humans, when we're amongst ourselves in a group, we cannot help but show our happiness or our sadness. And when everybody got happy, I'm like, okay, how much happier can it get? I mean, everybody's in. Who's left to buy? So I mean, literally, that's where I got the name Rogue, because it's like, you know, you need to get with the program here. You need to help support us. And I'm like, no, I'm here to support me. I'm a selfish son of a bitch.
Well, clearly you're not, because you give so freely of yourself and your experience to all of us, and we certainly appreciate it. I know that every time I get to have a conversation with you, we go into an hour to 2 hours of chat, which is just incredible. And you always claim that I bring something to you, but I'm just so thankful for you and your time and for giving to our community here tonight. So thank you.
And Rich, there was one more question that I didn't answer. That you gave me two, and I want to make sure I get them all.
No, the second one was a joke. It was about Kramer's Investment Club.
Well, clearly I'm a member and I follow it, and I suggest everybody do that. And if you do that, let me know so I don't ever listen to anything you say.
We appreciate you, brother, and I did my best to get to as many of the questions as we could fit in this hour and a half. Hopefully, John, after you relocate in the next week, let's in a couple weeks we can do this again and keep it going, because I would doubt that anybody here tonight would argue that their time wasn't well spent.
I'm happy to do it anytime. You know, next week is the week from hell. Moving is hell, but we're looking forward to our new home, and so get that out of the way. Get my wife happy, because she's bearing the brunt of this move, and then I'm happy to do this however often you want to, Rich. You know, first of all, I love you guys. I want everybody in the Misfits to win. I mean, I really do. That's you know, that this is it's kind of like you get to my age in life and my place, and you're like, you know, how can I give back? And the best thing I can do is to give really sincere traders who want to succeed, you know, my 2 cents.
Yeah, a little different than the Igloo, a little different than the last place we were. So we appreciate you, everybody. Go do your banter wherever we're going to do it in here tonight. Go on for hours if you want. Get a drink.
Thanks,
Good to be
Rich.
with you, and we'll see you on the trading floor tomorrow. But just remember, a day after a big day like today is usually a good day for traps.
No, and remember, Monday's a holiday, so people will be leaving the exchanges early.
Indeed, they will. Indeed. All right. Night, guys. Thanks for everything.
Thanks,
Hey,
guys. Have a good one.
guys,
Thank you guys.
remember, MANAEG.